Good afternoon and a warm welcome once again to our participants across EPS platform, YouTube, Twitter, and Facebook to the Business and Banking Dialogue. Today we were a little worried about the cyclone, but looks like the cyclone has passed us and we are safe, looks like. And so we will continue with our discussions for today. My name is KK and today our guest is Ms. Sushma Kaushik. Sushma is a partner of Aavishkaar and brings with her over 18 years of diverse experience in the field of early stage investing, small businesses, incubation, and consulting across sectors. She has extensively evaluated transactions covering debt and the equity side, both sides of the structure. So she is pretty well versed. Sushma has worked to identify, manage, and exit large number of companies and has worked closely with several inclusive business enterprises. One thing most people don't know about her, perhaps, is that she mentors startups in her free time. Now that's a very important, that's a great thing that you're doing, Sushma, because there are so many startups and so many young people who want to do a lot of startups. So that kind of mentoring is extremely important. Thanks. So any one of you having an idea to do a startup and you need mentoring, you know where to go. Also, she was recognized by IAAIF as the 40 under 40 alternate investment professionals in India, which is a great tribute to her that she's won that award. And today she's with us to talk about fundraising. Good afternoon, Sushma. How are you?
Good afternoon, KK. All well. Hope all well at your end. And Nisarga hasn't caused too much havoc to you.
Yeah, it's all so far so good. Everything is good. So, Sushma, is there a recovery of business activities underway? Have you seen that?
It's still early days, KK, but we are all very hopeful. And if you look around us, you see certain cities have opened up post the lockdown. And the economic activity was more than eager to pick up. If you talk to people living in those cities, especially in cities like Bangalore, Gurgaon, I think people are very quick to forget what happened during the lockdown and the COVID impact. So I'm quite hopeful that similar things will happen to us who are sitting in Bombay as well. And COVID will be a soon forgotten phenomenon.
Oh, that's great. Yeah, that's good words from you, Sushma. I think a lot of people have welcomed those kind of words. So have you started working on any fundraising activities already? Sushma, are you there? Hello? Sushma, are you there?
So fundraising is
Okay, sorry, participant, just hold on. I think today most places are having a problem with internet connections. So if you could just have some patience, I'm sure she'll join us quickly. So Mani, are you in the call? Are you in the session?
Yeah, Kumar.
Okay. Yeah. So sorry, Sushma has briefly perhaps network. Like I said from morning that there has been a problem with network connections and perhaps it has hit there. So how are things out there with you?
Yeah, fine. I think it's drizzling. Everyone is waiting for things to, I think it's get over. And we thought COVID is getting over, and we have another. Now you have Nisgar and Nizarg is there. So we'll have somebody tomorrow, Kaveri wave with us. Then you'll have somebody. and Ganga will be there. You don't know, all these things will come once in a while.
Yeah, we see.
Sushma has just
Sorry.
joined India.
Yeah.
Sorry for that glitch.
No problems. Yeah. So we were looking at,
Yeah.
are you already
I'm
started
sorry about
working on?
that.
No problems. Yeah, it happens.
Yes, fundraising for us never stops, right? So
Okay.
sometimes we're raising funds for our portfolio companies, sometimes we're raising funds for our funds itself. So the activity never ceases. And even as we speak, we are busy raising funds for a couple of our portfolio companies.
Okay, that's nice to hear that, because that's going to start a lot of economic activities. So Sushma, to give perspective to our discussion on fundraising, let's briefly talk about a few things so that the audience, the participants at large understand what's the discussion all about. So what does fundraising mean according to you?
So fundraising means raising capital. It could be debt, it could be equity, and it is the lifeblood for most companies. For especially for financial services, capital is the raw material, and without the raw material, there's not much business they can do, and without much business not being able to do, there is not much economic activity. So it is the cycle, right? And so fundraising becomes that much more important in the overall scheme of things. More so in a scenario like we are facing now, where capital is what will differentiate the winners from the not, from the survivors.
Yeah. Yeah, thanks. So, a lot of people raise, think fundraising is all about donations. So how is fundraising for commercial purposes and donations different? Or is it any difference there?
Again, there are different types of capital available. So on one hand, you do have
Hello. Am I audible?
Hello? Yeah, go ahead.
Yeah, can you hear me?
Yeah.
Yeah, so as I was saying, that there are all kinds of capital available. So there is capital for grants and philanthropic activity. And those are normally, those are channelized to people like NGOs or people doing other project-based activities. At the other end of the spectrum, there are capital for growth purpose, where there's investor pool of money available for returns. So it's a large spectrum, and both coexist quite beautifully.
Oh,
okay. But the fundraising activity is the same across.
It's the same. It's the same for both across all forms of fundraising. So tell us some fundraising types and how do you do it?
Fundraising types, again, as I said, it depends on the nature of the requirement for the funds, whether it is for an investment purpose, whether it is for growth equity, whether it is for seed. So actually what's interesting is the funding ecosystem is quite wide and diverse, and is still evolving in a country like ours. As compared to more developed economies where the funding ecosystem is far diverse and vibrant and deeper. For example, in a country like ours, when someone starts out to start a business, they initially bootstrap. The initial funding comes in from friends, families, and from known people around your first circle. Once you have startup and established, you move on to the next round of funding, which largely comes from angels. From the angels, it moves on to the seed round. From the seed round, it moves on to the pre-series A round. Then the series A, B, C, D. Then hopefully there are the public markets. The public markets in India are also quite active. There's also an SME exchange for slightly smaller businesses. Then we have pools of capital coming in from pension fund, insurance, mutual funds. All these will only strengthen the economic ecosystem for the funding environment.
Yeah.
In addition to all this, there are also now the likes of secondary funds coming in. And hence having a vibrant ecosystem becomes that much more important because not only are investors in the business of investing, but they're also in the business of exiting. And if for them to exit, then there needs to be this continuum of investors available to take on the baton from them and take the company from one stage to the next. And that's where growth capital plays such an important role.
Okay, yeah. So, we heard a lot about a dinner fundraising. This something happens in the West, and generally with the Hollywood stars and all that. So, and then you have something called a silent auction. These are some of the terms we've been hearing to raise funds. So, are these popular in India also?
Yes, definitely. These are new avenues to raise funds. Mostly, what people have seen these kind of activities work well for philanthropic activity, as we have seen in Bill Gates, Warren Buffett, all of them came together for a cause. And in one such activity, they all pledged a percentage of their net worth for a noble cause. And so absolutely these activities are there. In India, however, these things are yet to take off in a big way.
Oh, okay. So it's still a long way to go, perhaps in India, with dinner fundraising, which is so popular. I'm sure participants must have heard a lot about whenever the elections come, there is dinner fundraising or some kind of social activities that happens. So let's look at the donor side, Sushma. Okay, you have the old generation which has been providing a lot of funding, contributes a lot. Let's look at the millennials and the baby bloomers. What is their thoughts, and do they fund? Do they come for these kind of fundraising activities, both for commercial and for charitable work?
So I think, KK, what's important is, to understand the different economies, right? So if I were to draw parallels between the Western economies and India, especially the US, right? US is an extremely highly consumption-driven economy, right?
Yeah.
And we all know that the savings or even the habits of savings are far lower than a conservative economy like India, where from very early days, it's built in that saving is important. Though that also is changing among the millennials and the Gen X's and Gen Z's as you keep looking at them. But it still is very core to our ideology of saving, right? However, in the Western countries, it's largely consumption driven. So when it's consumption driven, people tend to have a lot more surplus available for themselves and some to give others, right? Similarly, however, in our country, first, it's, the priority is very simple, roti, kapda, makan, and that pretty much kind of continues even today. And once the roti, kapda, makan phase is passed, or we move forward from there, that's when, people start on consumption related activity. The millennials are moving towards that because very soon they're realizing to go away from an asset heavy to an asset light kind of investing model. And so there are surplus available. And if you look at, there are a lot of crowd sourcing platforms like a Milap or a Keto, where especially in times like this, we've seen a lot of activity where people donation activities that have picked up, where people have voluntarily given a small corpus of their funds for a good cause. So yes, it's happening, though the quantum might be less and small.
Okay, yeah, thanks. So we'll talk about cloud sourcing a little later in our show. So ladies and gentlemen, I have tried to get you from Sushma directly a kind of a 60-feet view of what is fundraising. Okay, so that as we move along into this discussion, you get a perspective of what's happening. As you know, when it comes to design, design or fashion, one cannot avoid thinking about Milan. Okay, designers in Milan are coming together for an auction to aid one of the hospitals that were badly hit by the virus. Okay, so that's how it is that I'm waiting for Sushma to come. I think she's dropped out, and so that's how fundraising is important. So you're back. Great. Okay. So I was just telling them, Sushma, when you were out for a moment, that people come together for a cause. So like in Milan, the designers are coming forward to aid one of the hospitals that has been badly hit by the virus, and that's the power of fundraising. That it can go for any reason, and it can get you a lot of money if there's a right way of doing it. Okay, that's the power of fundraising. I just wanted to kind of brief them. So Sushma, it is said fundraising is months of planning. Is that true? Does it take a lot of time?
Definitely, it takes a lot of time. There are multiple factors that play an important role in fundraising. When you're talking to an investors, there's a great deal of comfort investors draw from the team, from the management, from the entrepreneur, from the sector. And so, and all stars align at the right time for you to be successful in your fundraise activity. So it's not easy. I know we do hear of stories where people raise money with one meeting with investors, and the same stories you also hear that there are entrepreneurs who've been on the road for almost 12 to 18 months and still have not been able to raise adequate capital or have not garnered enough investor interest. So it takes all kinds, and some get lucky, some don't, but it's a lot of effort. Even the ones who do get lucky, they have some things going for them. They probably know how to tell their story well. People relate to them better. People understand the pitch as soon as they hear it. So there are multiple things that work in a fundraising environment.
Yeah. So I'm sure there's a lot of hard work. There's a lot of planning. Months of planning that happens, and that's where where the problem comes. I said, somebody said fundraisers plan a lot, but sometimes God laughs at them, and that's exactly what's happened now in the aftermath of COVID-19. The fundraising landscape has changed like never before. So what are the shifts in dynamics of fundraising, especially in view of COVID-19?
Sure, I'll use some statistics of the PEVC industry and how the fundraising has moved or changed. Although I think it's a little too premature. Just some data points. In 2019, we saw total investments of close to 37 billion in India alone, and 30% of them were normally in Q1 of that year. In the same period in 2020, we have seen almost a 40% drop in investment activity. It's $5.9 billion is reported as investment. But guess where all that money has gone? It's largely for one large investment, which is Reliance Jio, right? I mean, most of the billion-dollar checks that are being written today are all going to this one company. So it's definitely a very skewed data. While investments might be happening, large investments have happened only in one notable company, right? In Q1 of 2019, the private equity fundraised was close to 3.2 billion. So that's the source of capital that's available for investments to happen, right? In Q1 of 2020, the same fundraising activity for funds have dropped to $500 million. So you can see the significant drop in just the fundraising activity and hence the supply of capital that will be available for investments. Also, the number of exits for private equity and VC funds have dropped by close to 40%, right? And as I had mentioned earlier, exits are just as important as investments. And as long as exit environment is robust and vibrant, investments will continue to happen. So in a COVID kind of a scenario, you know, there's dry powder of approximately $80 billion that are sitting in the sideline, just waiting for economic activity to pick up. Right, so it's only a question of time of when things will pick up, that all this capital will start getting allocated rapidly. But you know, it's just that the lockdown has put in a little bit of fear and of the unknown. There are a little bit of uncertainties because of which, you know, taking investment decisions is becoming a little more challenging. So that's that. I still am quite hopeful that there's so much supply of capital available, and once things open up, things will return to normalcy, the new normal.
Yeah. So did you say it's $80 billion?
That's right.
Oh, so that kind of fund is waiting to be kind of invested or given as funds. So that's a lot of money, and I'm sure with once this COVID-19 kind of wanes out, there will be a lot of activities around that. So, Sushma, going further, so what are the key mandates that are likely to, for the fundraising through COVID-19? What are the key mandates that you are expecting?
So, you know, some very interesting things will happen. People are slightly scarred by this whole lockdown. So, and like most investors we've seen, including us sometimes, tend to be quite risk averse, right? So we do believe in capital protection. And so some of the investment decisions will have some weightage on this fear that it will be there.
Yeah.
So I believe that the fundraising environment will shift a little, where more money will go after bigger, larger companies. So big will only get bigger. Case in point being Reliance Jio. Large funds are writing big checks for this one company, and they will only get bigger and stronger. Right. Other opportunities where people look at investing is strong business models, which will thrive with a few modifications on digital transformations. Again, we are seeing some cases where, people during the initial fear, bank stocks were beaten down in public markets as well. But now things are returning to normal. All the bank stocks continue to do well. FIIs are putting in more money after them. And especially those where they do believe that, you know, with a little bit of digital transformation, they can be a game changer. Right. The other areas where people will look at putting in money would be where there are strong management teams who have the ability to navigate through crisis very well and who will come out stronger again. And more importantly, where I will see, where I believe there will be a significant shift in investments would be in digital transformative businesses, right? So clearly, COVID has been a wake-up call for many to smell the coffee and realize that what the impact of digital transformation can be on consumer behavior patterns, right? And we've noticed that new models are quickly emerging, whether it's in edutech, whether it is in health tech. These are areas which are just waiting for digital transformations to happen for them to pick up and muster steam. So that's one area. An area which will continue to do well, and were unaffected so much by COVID, what are the essential services or products that continue to be focused on basic infrastructure, which could be health, waste, sanitation, improvement in living conditions. All the more people have understood that social distancing would probably be a norm going forward, and so having good infrastructure would benefit society at large. So that again, these areas will see a lot of money flowing in because of the growth that could envisage. And then on-demand businesses are going to see a huge increase in interest. Like, for example, delivery, gaming, entertainment, all of these. And it's quite obvious, right? I mean, everyone has been locked down for over 70 days. And what are the things that they're consuming? It's on-demand entertainment, it's gaming. Kids are all hooked to Fortnite. The Zoom video conferencing have all gone up. Case in point being us. All our meetings are largely on Zoom or on other such platforms. So clearly, for investors who are probably sitting on the fence, undecided on how things will go in these transformative businesses, I think the use cases are now quite well established, and so that will see activity rates there as well. Organized businesses will also see a little pickup. When I say organized businesses, for those who are familiar with financial services, now there are a lot of intermediaries who are around, whether it was the DSAs, whether they were insurance agents. I believe there's going to be a shift from the unorganized to the organized, and in the process of organizing these things, there could be a lot of capital that would go after them. Areas where one would see delayed recovery would probably be very luxury, lifestyle, consumption-based businesses. Probably like a movie theater, right? I mean, people will go less there, at least in the mid to short term. Similarly, for restaurant businesses, I don't know how many people would be comfortable sitting in a restaurant, whether it's fine dining or even QSR, whether people would be comfortable eating out. So those might take a little longer to recovery, but yes, overall, these are where the opportunities would be, and depending on the stage of funding, investors would go after these themes.
Okay, thank you, Sushma. I think that was a lot of perspective you gave in the way forward, the post-COVID. So participants, yeah, please, like always, put in your questions in the Q&A box, and we will try to get it across to Sushma. We will some participants who wish to ask a question directly to Sushma also can do that. And Sushma, if you don't mind, one or two questions we will take in directly from the participants. And
sure.
So for doing that, yeah, thank you. So for doing that, participants, you know what to do. Raise your hands, and the back office will try to tell you when you can unmute yourself and you can ask the question. So we continue with our discussions now. For a commercial organization, Sushma, what's a better mode of fundraise? Is it fundraising, or is it some kind of a venture capital? And what factors does a commercial organization think about while deciding what do I do? What do I do?
So for any kind of a business, right? I mean, of course, one needs to look at their own business plan and see what their growth plans are. If they really intend to grow, and if capital is a requirement for that growth, then I think it's a no-brainer. Yes, fundraising would be required. Now, where will they get their funding from is something that is determined by the size of the business, the stage of the business, the market environments, various other factors, right? And how the business has been performing, what his or her growth plans are. All of these have a strong bearing on whether they should be raising funds, whether that fund should be equity in nature or debt in nature or a mezzanine structure in nature. So there are multiple aspects to fundraising.
Okay. Yeah, thanks. So, like I said, I did say that we do ask a participant to kind of ask a direct question. So here we are. There's already a participant who wants to ask you a direct question. That is quick. We have Mr. B.S. Murthy, who's a ex, regulator. Mr. Murthy, good to have you here with us. You may unmute yourself and ask the question to Sushma directly.
Let me clarify. I was not a regulator. I was basically a commercial banker of very long vintage. So, right. So I have this couple of questions which I think I'm granted by KK. See, you talked about an instance of big checks being written for just one company, right? It's a big conglomerate. It's not a startup. I mean, by any stretch of imagination, right? Do you think that the innovation is backing innovation would take a backseat, or people, the VCs of the world or PEs of the world, they don't have the heart to probably take more risk. So if they can't take the risk capital, right? So is there a chance for someone backing a company like, the likes of Google, Facebook and all in India at all? Or probably we were called lazy bankers, right? I don't know what the word used, because the sense I get is he said people are comfortable to write big checks to big conglomerates and all that. So what happens to the innovation part of it? Number one. Number two, the second question is, so we are talking of jumping to economic recovery, rightly so, of course. So which kind of alphabet you would vote for? V, L, W, S? What kind of recovery? I mean, I'm sure that you are on the ground, right? Where do you vote for, right? I know prediction is not an interesting game, but okay, I'm done.
Sure. Okay. So let me take your first question, which is on innovation, right? And I strongly believe that the Indian startup ecosystem is extremely wide. Can you hear me?
Yes, please.
Yeah.
Please go ahead.
Yeah. I think we lost you for a second. Yeah, go ahead.
Yeah. So, as the innovation ecosystem in our country is extremely vibrant and very specific to our country, right? It's not like people are parachuting models that have worked in Silicon Valley into India, right? Our problems are unique, and our solutions are also equally unique. And so the ecosystem in innovation is very, very robust, and probably that's one of the reasons why you see emergence of incubators, accelerators, entrepreneurial hubs taking form, and so there is room for early stage investors for their activity in investing as well. However, I also do believe that we are in early days of innovation, and it takes a little time for us to become the size of a Google or an Amazon, right? I mean, even in all fairness, even in their own countries, they've taken that long to reach where they have reached. We've just got a little later to start off, and so there definitely is a lot of headwinds that they have for them to do well and to grow. So the innovation, we wouldn't be surviving if it were not for the innovation. And there's so much scope for innovation, whether it is in payments, whether it's in fintech, insurtech, agri-tech, health tech. I mean, you name it, in a country like ours, everything is such a large problem and we strongly believe now that technology can solve for these problems. So innovation is not going away anytime soon. And just because there is one large conglomerate that is guzzling all the money, it doesn't mean the small checks are not being written. It's just that, they are hogging all the headline space right now. The small news are not being spoken for. And also there's a little bit of, the policy paralysis that has set in is probably sending many of the investors in a tailspin to try to figure out what's going to happen in these economies. So that's the only thing. I only believe it's going to be a delayed process, but investments for innovation will continue in a big way. So that was your first question. Second was, sorry, I missed the second question.
The economic recovery, which alphabet you would vote for? V, U,
Right.
L, S, W, Z. One
Yes,
mathematics reverse square root. I don't know.
I know. So I do remember when the Harvard Business Study came in and they said it's going to be a V, it's going to be a U, or it's going to be a W. And I was like, that's so simple. I mean, if only things were that simple and, we could put an alphabet to it and everything would work out, that it's fantastic. But clearly, we are seeing that recovery rates are taking their own shape and form, and for each sector, it's going to be different. Essential services didn't see any V; they just saw upward trajectory, and even during the lockdown, they were not impacted. Non-essential services probably are in coma for a long time. However, the way economic recovery is definitely in the offing. Even in spite of Moody's downgrading us, I think if you look at all the other economies in the emerging or in the developing markets bucket, India will continue to be the rising star, right? And it's just the sheer number of people that will drive things forward as long as there's a pro-policy environment, right? And so that's what we are hoping, that while there are all these announcements, packages and big promises being made, actually, if little more capital flows to the hands of the masses, economic recovery is certain. So that I will not try to take a guess on what alphabet or what type of recovery pattern they will be, but recovery is for sure. However, the way we look at it is, if we were to split businesses, there would be the winners, the survivors, and the strugglers, and each one will have their own path to recovery.
Thank you.
Fine. So, do you get that at a micro level investment, you have some idea whether it will be V kind of recovery for that particular industry or unit, or U or Z? Do you do that kind of assessment? Is that what I get?
Yeah, absolutely. So the micro level investments are something that will start kickstarting very quickly, and we've invested in a lot of microfinance businesses, and we found that them to be the most resilient of the lot, because they actually are the ones funding the micro economies, right? And these are all wheels behind the wheels, right? So when the smaller wheels start getting in motion, eventually the larger wheels also start moving forward, and then we will all take this huge country forward together. So microeconomy recoveries are fundamental, and they are the ones that will see the quickest recovery as well. So credit has started flowing to that segment now. And it's only a question of time when things start moving forward from there.
Fine, thank you.
Thank you. Thank you, Sushma. Thank you, Mr. Murthy. Good to have you here. So I'll take a cue from Mr. Murthy's question on the alphabet, whether it is D, W, U, V. And I will take a pick of D. For me, D is digital transformation. And I think that's something that I would ask you a query on that. So where do you see digital transformation happening in terms of which sector you feel there's going to be a lot of digital transformation? And is that a way forward in the post-COVID era?
Absolutely. So as I was mentioning earlier, digital transformation has, especially during the COVID era itself, clearly highlighted the need for it, right? So whether there's this joke that's doing the rounds on internet is who pushed the company for digital transformation? Was it the CTO, the CEO, or was it COVID? Clearly, COVID is the winner here.
Yeah.
And while billions of dollars have gone into trying to change consumer behaviors, right? I mean, when you saw Paytm or Amazon or Myntra or Flipkart, they all used to give so much of cashbacks just to entice us to start transacting online and changing our behaviors. A COVID kind of just pushed everyone that much more. So what they probably took 3 to 4 years in achieving, COVID has done that in 70 days, right? So digital transformation is here to stay. And as I mentioned, some of the areas which will see digital transformation are areas which required physical engagement models will probably move to digital engagement models. Again, it can be split into front end, mid-level, as well as back end operations for digital transformations across sectors. As I was saying, consumption of digital content will go up. And the way people view content will change. Entertainment, digital transformation in this space of entertainment will also change. So there's scope there. Health, people are clearly having a lot of problems in reaching out to the right healthcare providers. And I do know that we have been looking at telehealth for a very long time. And we never saw the tipping point for this to happen, right? People were not accepting of anything tele when it came to health. They wanted a doctor to hold on to your pulse, to tell you whether you need a certain medicine or whether you just need glucose to be put into your body for you to get better. But they still needed to go see that doctor, the doctor to hold your hand and to guide you. But now teleconsults are picking up in a big way. We believe we can see it similar for diagnostics, medical diagnostics. Look at education, look at what is being doing for all the kids. Schools are shut, but that doesn't mean the learning has shut. Digital in education is going to take off, and it's across the segment. It's not just the rich who are being able to do that. It's happening even in all kinds of schools, in all schools, whether it's preschool, junior school, senior school, whether it's for consumption of science, English, extracurriculars. All of these are taking off in a big way, and all through digital platforms. And these are here to stay. It's not like, once the lockdown is lifted, things will return to normalcy very quickly.
Okay, thank you. So actually, I was going to ask you, are there any new models that are emerging in the post-COVID era? But I think you have kind of answered them already. So I would like to invite Mr. Krishna. I think it's a journalist. So Mr. Krishna, can you please introduce yourself and unmute and ask the question?
Sushma ji, good afternoon. This is Krishnan Tripathi from ETV Bharat.
Good afternoon.
Just wanted to ask you what is happening in startup funding space during the time of lockdown. What is Aavishkaar Capital is doing? We are aware that you funded Ergos in April. In general, what is happening in a startup industry, and in particular, what Aavishkaar Capital is doing? And is there any particular kind of categories that you are looking at that will have a better future, like telemedicine, this kind of things that will be in great demand after the lockdown?
Sure. Yeah, happy to answer that. So ever since the lockdown, I can, for one, definitely say that we haven't had a dull moment at Aavishkaar. We are constantly evaluating opportunities. On one hand, we continue to support all our portfolio companies to understand, their capital runway, their financial health, and also, to guide various entrepreneurs and their teams on the way forward in a post-COVID environment. In addition to this, yes, we have completed two transactions. One just pre-COVID in a fintech platform, which was a marketplace bank for small business owners called Checkbook. And the other was, as you rightly pointed out, to Ergos, which is a grain bank for the farmers. And both are digital transformative businesses, and both have done fabulously well even during the lockdown, because the segments they are servicing are clearly the ones that were very resilient even during a lockdown kind of a situation. Their need for service was high, and their operations did not stop, whether it was for small kirana shops or whether it was for farmers, especially because it was the harvest season for the farmers. They needed a warehouse facility. They saw the benefits of having something like that. So agri-tech and fintech are two areas which continue to be the mainstay for investor like Aavishkaar. And going forward, we will continue to look at opportunities in this space, because A, they are underserved to a large extent, and B, the opportunity is so large, and C, the innovation in this space continues to be growing at a very great pace. And similarly, even when it comes to products like insurance, and people's awareness on insurance has suddenly gone up in a big way, especially thanks to COVID. They've understood that the healthcare costs are going up, and in this scenario, having products which are protective in nature will be conducive to them. And so the insurtech is another opportunity that I think in this environment has also picked up in a big way. Edutech and health tech, as I had mentioned, are also areas which are seeing a lot of investor interest, and will continue even in a post-COVID environment.
May I just ask a follow-up question? How many applications are under active consideration of Aavishkaar Capital during the lockdown period? How many applications were under active consideration?
Sure. So on a regular basis, even in a pre-COVID scenario, we used to get close to about 50 to 60, proposals in a week, right? And I don't think COVID has stopped that in any way. We continue to talk to a lot of entrepreneurs. We continue to engage with many of them in various stages. So I don't see how a COVID, just a lockdown or a non-physical meeting has impacted us evaluating proposals. And the opportunities are huge, and the kind of work people are doing are great. So, it's just that everyone has only limited bandwidth to do work on these matters.
Thanks a lot.
Thank you, Krishna ji, and thank you, Sushma. That was great, this thing. So actually, taking a cue from that, from what you just spoke to, as I gave an answer, my this question was, so what are the three important factors that you consider in a startup, typically in a fintech industry, fintech kind of a startup? What, like you said, checkbook, okay? So we don't have to be, you don't have to give me the answer of checkbook itself, but it's generally what are the three most important things, aspects you see when you do a funding for fintech?
So when we do funding, irrespective of whether it's fintech, agri-tech, or health tech, or any other company, what we look for is the problem they are solving large enough, and will that problem remain a problem for a long period of time? So this is one, that's a cornerstone for us when we are evaluating any opportunity. Second is the team that is working on this problem equipped to execute on what they are proposing? So the team capability plays an important role, right? If these two are there, then we put on the third filter to say that, is capital going to solve the problem, right? Is capital going to help this company solve for this problem? So this is how we typically evaluate, opportunities, and irrespective of the sector it is in, that's how we look at it.
Thank you so much. So before I continue my discussion with Sushma, again, request participants, we have just about another 10 minutes to go. So please put in your questions now, because at the last minute, if you put in, I will not be able to take it across, because we value time of our guests. and we don't want to go push that limit of 4 o'clock a bit too much. Okay, we talked about cloud sourcing. In our discussions, Sushma, we talked about cloud sourcing. Can you tell us a little more on what is cloud sourcing? Which are the kind of businesses that seek cloud sourcing, and is it something that is available, or is it something that as a model a lot of fundraisers use?
So yes, it's again a very new feature that has come in, and more so because of late, and this is in a pre-COVID environment, people's surplus capital was there. People were looking at investment opportunities across across of companies. Innovative business models were taking shape and form. There was a lot of discussion on unicorns. And so everyone wanted to be part of a unicorn's journey. So they were hoping that they will be able to identify those rising stars early and participate in them early in the growth. Right. So this kind of has given rise to a lot of investor interest in early stage investing. And so this also has given rise to a lot of crowd sourcing platforms for fundraising. Though I must admit that it's for very small amounts, right? And also it depends on the kind of the due diligence infrastructure, the screening infrastructure of what kind of companies come in, and what kind of analysis is built and shared with investors to make those investment decisions. So they are for very early stage investments. And that's again a factor of the kind of ecosystem, investor ecosystem that is being developed in our country, which is very good, right? I mean, there's investment available at all stages.
Okay, so just can you give an example of any cloud sourcing that has been done?
So there are certain platforms, I'll not take names of these platforms, but platforms who have been supporting very early stage businesses, sometimes businesses that are just out of college, where who are looking for some kind of seed money, probably in the range of 1 to 3 crores, $500,000, and they bring in about 4, maybe 5 investors who come together to put in money in this high growth, high potential startups. So there have been incidences of those.
Okay, thank you so much. So let's you touched upon risk taking, okay, and so let's spend a couple of minutes on risk taking, because we know risk taking of banks, okay. We are all very well aware of risk taking. So you are also in a similar position where you have a set of funds you have already given to maybe 10, 20 customers you already have. And then you also want to grow, you want to grow your business. So you have another set of, you said about 50, 60 proposals already there with you. So how do you take a view on this risk? Because you already have a lot of funds that are already given, okay? And they could be in various stages, not that everybody is paying on time or whatever. And then you have these 50, 60 new proposals. How do you balance between these two? Or what factors are you take into consideration?
Sure. So let me just explain to you the investing approaches for different funds. And again, it's different for different funds. So very early VC or early stage funds, the way they look at it is they are on a quest to identify unicorns, right? And which are the alphas in their portfolios that will generate the supernormal returns. And typically the mortality rates in those kind of portfolios would be higher. So if you invest in close to 30 companies, maybe 20, 25 would not see the light of day, but the rest of them would hit the ball out of park. And that's what gives them the kind of returns that, one hears of. And so all of them normalize and things are all very good and hunky-dory. see, also you have to understand that investors have a fiduciary responsibility towards the investors who have put money for them to manage. And so, and hence ensuring capital protection and then returns on that capital is very important for all investors, irrespective of the size, shape, stage that they invest in. So while VC firms go after the alphas in the portfolio, growth or early growth kind of investors, even like Aavishkaar, we tend to go after more stable kind of returns. We look at those businesses which will definitely return the capital back and make some returns in the process. You know, not from a portfolio approach, we take a very probably the risk weightage is higher in growth capital. So they go after models that are proven, larger, established, where they know year-on-year growth trajectory is in a certain path. If not 30%, it will probably be 20-25%, but it's not as volatile as one would expect in very early stage businesses which are still evolving on models. And so there the mortality rate, or there the scope for mortality is far lower. And so all of them should give a moderate to high returns. So that's when, you know, the portfolio starts performing well. So that's typically how investors build portfolios. It's not a gamble. It's not, you know, throwing darts and hoping one of the darts hits the target. It's a science that goes behind it. A lot of evaluation goes behind it. So from investments, funds that make 100 bets, they are hoping that at least 20-25 of them are going to be their unicorns. Some will end up dead, some will end up being zombies, but overall they should still return capital to the investors. Larger funds will look at making maybe 10-15 bets, but of the 10-15, you know, 90% of them have to do well, generating at least 20-25% returns. Otherwise, they will not be able to raise the next fund.
Okay, yeah, thanks. That's a good explanation. So, you know, since we are in this COVID period, one question that we do ask everyone, and that is, what are the 3 important lessons the pandemic has taught you in fundraising? So if you could talk about it.
Very simple lesson that came very early on was man proposes and God very easily disposes, right? And so no matter what one plans for, hopes for, wishes for, there's someone up above who will ensure that things that should happen will happen as per his will. Right? So I think so there the learning is that, okay, put in your effort, persevere, and hope for the best.
Okay. Yeah, thank you. And that I think applies to almost everything, generic, right? You can only do your best and leave it to God. Yeah. So, you know, taking the cue from what we spoke about, that investments have happened only in one particular company or in one particular sector that has happened in this year. So the question that somebody is asking from Facebook, he hasn't mentioned his name, is that if that is what is the trend that perhaps is going to be 2020, at least that's what he's assuming, towards that everything is investment is going towards large firm. What's the new strategy one should follow while raising funds, or are there any alternatives for smaller people?
No, businesses? So not for a moment am I suggesting that, you know, money is only going to go after large large companies or large conglomerates. It just so happened that, you know, this one investment has hopped up large amount of capital that has gone into the space, right? But as I said, there's $80 billion waiting in the sidelines. So there's enough dry powder available for strong business models, for entrepreneurs who are working on good business cases. So I'm quite hopeful to see how things will pan out very soon.
Okay, great. Thanks, Sushma. I think we have, reached our end of the session. It's, 1 1 full hour we have spent, Sushma, with you, and there is a lot more we can talk about. But keeping time valuable to you and to all of us. So before we go, one final question, Sushma. It's said that 50% of in North America, 50% of fundraisers are ladies, okay, females, and you are one of another person out here in India. So why is it that is there a reason why are you all better fundraisers?
Okay. That's a very interesting statistic that I hadn't heard before, and I'm glad that you pulled that out, because I haven't come across too many women, especially women in the investing fraternity, more so doing fundraising, right? Maybe the India ecosystem is yet to catch up with what's happening in the US. But that's great. I hope one day that it happens in India as well.
Yeah. Okay. Yes. Thank you very much. I will send you the source from where I got this. And thank you very much, Sushma. It was really wonderful talking to you. And I think the kind of answers you have given has been extremely good, extremely thought-provoking, and to the point. And I think we have all got very good interest in the fundraising aspect. I'm sure a lot of participants have gained a lot out of this. I thank you once again on behalf of EPS and the entire team for spending your one precious hour with us and telling us all about fundraising. Hopefully, I would like to see you again some other day when we can take up some other topic and discuss this further. Thank you once again.
Thanks. Thanks, KK. Really enjoyed this interaction.
Thank you.
Bye.